Hello and welcome to Cost Accounting. I am your host, Dr. B, and today we're going to talk about activity-based costing. The idea of activity-based costing is that we look at costs from a perspective of the activities that the business is working in. The activities are what drive the costs, and that's what we're going to talk about today. First, it's important to understand simple costing systems, and these are traditional systems that utilize factory-wide manufacturing overhead, which is accumulated in a single cost pool. We call this the single plant-wide cost pool method. Typically, it's just one rate. It's just one plant-wide rate that's calculated by dividing the total cost in the plant-wide cost pool divided by the total quantity of one cost driver. An example of that would be direct labor hours or direct labor costs or machine hours. These cost drivers are the activities that drive the cost. Manufacturing overhead costs are assigned to each product based off of their usage of that cost driver. The usage, for example, being the number of direct labor hours, the number of machine hours used. So here we have the formula for the plant-wide rate. We take the total manufacturing overhead cost in the plant-wide cost pool, and we divide that by the total quantity of a single driver. For example, total machine hours or total direct labor hours. Now, once we've identified that plant-wide rate, we look at this concept called smoothing the manufacturing overhead costs. And we do this for all of our product lines. And we look at it from an average cost. Each product line is its own distinct item. Not every product uses the same amount of manufacturing overhead resources, since it goes through the process and activities in the factory. If a company uses one plant-wide cost driver for all product lines, it will cause an average, also known as smoothing. It can also lead to skewed product costs, inaccurate or imprecise prices, and ultimately lost profitability and market share. And that, of course, is because we're averaging. In traditional job costing, we take the manufacturing overhead applied by one cost driver, such as direct labor hours, and we apply that single plant-wide rate of overhead to the direct costs, direct materials plus direct labor. Also, of course, be traced to services in that same concept. It's important to consider the volume of production for products because some products will take a greater portion of direct labor hours than others. Lower volume products we consider to be more of a group because they will use less direct labor hours and thereby assigned a lower manufacturing overhead cost on a per unit basis. Traditional cost allocation moves more of the manufacturing overhead costs to the higher volume products, which can be seen as subsidizing the lower volume products. In manufacturing overhead costs, it's very important to understand department rates. We had a conversation on departmental costing earlier on, and this concept builds on that. So when it comes to departmental rates, some companies use more detailed allocation methods for manufacturing overhead based on departmental cost pools compared to the single plant-wide rate method. The manufacturing overhead rate is calculated for each department that the product or service passes through. We call this a departmental rate. Some departments might be more labor intensive than others, so the direct labor hours as a cost driver is very effective. Other departments might rely more on machining, and so machine hours might be more effective for those departments. The departmental rate is calculated by taking the total manufacturing overhead costs in the department's cost pool and divide that by the total quantity of department's cost driver. So why use activity-based costing? What are the advantages of using it? Well, activity-based costing divides larger cost pools into a variety of smaller cost pools, similar activities that represent activities undertaken within the value chain. It uses more relevant cost drivers for each activity to allocate costs to products or services. Now, here we can see a more refined look at the allocation of manufacturing overhead costs based off of the activity drivers. And we can see based off of that allocation, we have a more accurate, more specific overhead cost applied to those respective products. So the traditional job costing method, it's systematic and it's applied to each job. In activity-based costing, it's more accurate because it's drilled down to the individual units based off of the activity. In traditional job costing, we looked at direct materials and direct labor costs as they're traced to each product line because they're direct. Right? Direct costs are easy to trace, indirect or not, which is much different than the activity-based costing model, where in activity-based costing, the direct materials and direct labor costs are easily traced to each unit, and it's more accurate because we use the cost driver approach, such as direct labor hours. In traditional job costing, the overhead rate's predetermined. Yep, used along with one cost driver, such as direct labor hours, and it's applied to all the different jobs. Whereas in activity-based costing, it's separated into smaller activity pools, and it's related to application. We take the manufacturing overhead costs and apply that to the jobs or the products based off of those usages of the cost driver. When it comes to reporting, traditional job costing primarily uses the financial reporting. income statement, balance sheet, statement of cash flow, statement of retained earnings. It's of course GAAP approved because they are publicly identified documents. The financial statements are, of course, and we cannot easily identify things like cost of goods sold, etc. In activity-based costing, this information is used more internally because it helps management to make decisions on the cost approach, and it's a lot more accurate. It would, of course, still be in line with generally accepted accounting principles as long as they are identified on the income statement, balance sheet, statement of cash flow, statement of retained earnings. And of course, activity-based costing is more encompassing of both product and period costs because these are the cost drivers. Yes. So what's the usefulness when it comes to decision making? For job costing, there really is no rule for management to use job costing in making decisions. It's more for understanding how much to charge the customer for that specific job. Activity-based costing, on the other hand, uses a full cost approach. And in this case, it's more useful for management to be able to make decisions based off of those cost drivers and the consumption or use of those cost drivers. So here we have an example. This company manufactures tomato sauce and Alfredo sauce. And the company has been using the single rate method in applying manufacturing overhead to its products. So we want to be able to understand this through this example. The manufacturing overhead is currently assigned at 90% of direct labor costs. So let's take a look at the data. We have direct materials, direct labor, total manufacturing overhead to equal the total product cost. And of course, we divide that by the number of units made for each product to get the total cost per product. Notice the manufacturing overhead. It's 90% of the direct labor cost. That is the current application that this company is using. And we can see the effect on the total cost per unit. Now keep this in mind as we move through the example. Since we now have the two products, tomato sauce, Alfredo sauce, being manufactured at this company, management decided to apply activity-based costing, which, as we know, is more useful. So let's take a look at the data. Direct materials and direct labor, of course, are the same. Look how the manufacturing overhead costs are broken out. We have moved to sort, cooking, quality control, cleaning, and maintenance to get our total manufacturing overhead costs. And of course, our total product costs, we divide that by the number of units made to get a cost per unit. Okay, which is much different than the previous model of just taking 90% of direct labor. We can see that 90% of direct labor was 41,000. By using activity-based costing, our overhead for the tomato sauce is 38,000. That's a significant difference. So because the traditional model simply allocates based off of percentage, it's not going to be as accurate. When the company moved to activity-based costing, we noticed that the total cost per unit changed. It's more accurate. The next thing we want to talk about today is the detailed cost hierarchy, which includes the activities and the cost drivers within. We think of activities as being cost pools. Cost pools, of course, are discrete activities that attract costs with how those activities attract costs. A cost pool. It's a grouping of like costs. We determine how employees divide their time among certain activities in order to understand the cost pools. One of the best ways to do this visually is to look at an activities flow chart. The activities flow chart shows how a product moves through the process, the production process. In this case, using our example of sauce manufacturing, we can see the different stages that the product flows through in the manufacturing process. So in looking at the flow chart, the company can decide on the difference of the activities of manufacturing overhead cost pools. This, of course, could be based on direct labor, which is easily traced to the final product. Since manufacturing overhead is incurred throughout the production process, it's not just one point within the process. For example, in the moving and sorting department, we look at the employees delivering goods from raw materials in the storage area using something like a forklift, moving and sorting. This, of course, makes direct labor a little bit more difficult to trace. In the cooking department, there are machines used in the cooking department. So machine time might be the best activity driver. Otherwise, direct labor would be the easiest to trace. When it comes to quality control, this works on production lines. So labor costs is a little bit more difficult to trace. What about cleaning and maintenance? These activities involve cleaning and maintaining. But it's not just one product line. So it might be difficult to trace that directly back to the product. So it's important to understand the activities related in order to gauge what activity cost driver is appropriate for each department. A cost driver is a task, effort, or other usage of that resource. The objective, of course, is to identify the cost driver and assign it the cost to discrete activities. Instead of using a single plant-wide rate method or a few department overhead rates, each activity is identified as a cost pool. This is the most relevant cost driver for each activity. Cost drivers should be easy to understand, directly related to the activity being performed, useful for the performance measurement purposes, in order to understand the allocation. Let's take a look at this through a diagram. Here, of course, we have the manufacturing overhead, which is being applied through activities: moving and sorting ingredients, cooking, quality control, cleaning and maintenance. These activities have associated cost drivers. Cost driver for moving and sorting is the number of pounds of ingredients moved. For cooking, it's machine hours. For quality control, it's the number of inspections being performed. And for cleaning and maintenance, it's the number of cleaning maintenance hours. So we've identified the cost drivers associated with the related activities. So since a forklift might be arguably a part of machine hours, the employees have to drive the forklift. So it might be better to say that labor hours over machine hours for things like moving and sorting. However, as a cost driver, ingredients, in terms of weight, for moving and sorting might be better accurately made because it measures the amount of time that employees are moving things around rather than being idle. So for that reason, we would look at number of pounds. In terms of cooking, we look at the amount of machine hours, since the machines are doing most of the work. Or we'll look at direct labor, but machine hours is actually doing most of the work. When it comes to quality control, the number of inspections makes most sense, because otherwise the employees doing the inspections might have a lot of idle time. Wouldn't make sense. For cleaning and maintenance, it makes most sense to look at direct labor hours of the employees that are actually doing the cleaning and the maintaining. And looking at the cost hierarchy, it's a ranking of 4 layers of costs incurred within a business. Systems, processes, and costs help us to identify the best cause and effect relationship between activities and cost drivers. Not every company collects data on this type of information, so it's important that we as accountants look at the information being collected in order to determine the best cost pool associated with the activity and driver. Hierarchies is just a real easy way for us to visualize and understand how to identify the cause and effect relationships between activities and cost drivers. So here we have the hierarchy in an example. Facility level, production level, batch level, and unit level. This is the hierarchy of manufacturing, but for products, of course. We identify the sample costs within the hierarchy, and we identify our rationale for identifying the relationship between the activity and cost driver. For the facility level costs, this is the top level of the facility, and it helps us to enable the manufacturing process for delivery of services. So it's not easily traced to individual products or services because facility level encompasses the entire manufacturing facility. Since it's more of a support, a company must use its best judgment when it comes to allocating support services. At the product or process level, this is based off of the entire product line or individual type of service. The costs are unaffected by the number of units or batches being produced, and it could be based off of the complexity or the design based off of the number of units being produced. At the batch level, this is where costs are incurred when a group of items are being processed together, batches. Machine setup might be different for each batch, and of course, cleaning and maintaining the machinery after each batch is processed, of course, takes that time and labor into consideration. For unit level costs, these increase with with every additional unit being produced and delivered. Easy examples include direct materials and direct labor. Most manufacturing overhead costs are not included at the unit level cost, but indirect materials could be at this level. So since we've gone through that exercise, it's important to understand the calculations being used in activity-based costing. So first, the implementation. What type of costs are associated with the implementation? First, we identify the direct labor costs, which of course is the most straightforward process in activity-based costing. So step one, identify direct labor costs, which would include direct materials and direct labor. Step 2, we look at the implementation through identifying activities and cost drivers. And so this process is relatively straightforward by understanding what our individual departments are or activities and aligning those activities with our cost drivers. Step 3 in the implementation process is to calculate the cost driver rates and assign manufacturing overhead. First way to find the denominator volume of which is, of course, the total occurrences of the cost driver within an activity. And we look at the availability of each activity's capacity and the manufacturing process to calculate the driver rates. So it's the amount of the activity cost divided by the total number of cost driver. When we talk about capacity, we look at manufacturing as a capacity. The theoretical capacity usually assumes 100% capacity with no downtime, although it's relatively unrealistic to achieve that type of capacity in manufacturing. There's always some downtime. Practical capacity would involve some downtime, shutdown for holidays, etc., maintenance, these types of things. This is probably more attainable. And of course, normal capacity. What does the amount of production look like on a day-to-day basis? So the formulas: activity-based rate, or the cost driver rate, is calculated by taking the total cost in the activity cost pool divided by the total quantity in the activity cost driver. And for the allocated manufacturing overhead rate for the activity, we take the activity-based rate from above times the actual quantity of the cost driver used. And looking at our earlier example, we had $26,400 in manufacturing overhead costs that were assigned to the move and sort ingredients activity. There are 230 pounds of ingredients that were moved and sorted. The denominator volume is 170 pounds of tomato sauce ingredients. The remaining 60 pounds were Alfredo ingredients. So we take the total cost in the activity cost pool, 26,400 in this example, divided by the 230 pounds, gets us to $114.78 per pound. We take that amount and multiply that by the number of pounds moved, in this case 60 for Alfredo and 170 for the tomato, to get the allocated manufacturing overhead for each unit. And of course, we record our manufacturing overhead costs. The traditional method is not as accurate as the activity-based costing method. However, you could use one or the other or both in some cases. We record those rates based off of the applied manufacturing overhead. And of course, if there's a difference, we would make adjusting entries accordingly. Here's an example of what this would look like using Excel and the allocations accordingly. And we went through this exercise. This is what it would look like looking at our T account for our department or activity. Here we have another activity for cooking and the allocation using the T account. And one of the last things we want to talk about today is going to be activity-based costing outcomes, which includes the selection to implement time-driven activity-based costing. So who should be using activity-based costing? Manufacturing firms, of course, should be using activity-based costing because it's more accurate, more precise information. merchandising companies could use activity-based costing, and their allocation will probably be used off of the number of products, etc. Service businesses and nonprofits could use activity-based costing based off of the number of patients or other activities. So there's, of course, advantages and disadvantages to using activity-based costing. We can see that the advantages outweigh the disadvantages relatively significantly. For service firms, of course, it's a little bit different, but we could use activity-based costing in service firms. An example of that would be the number of jobs being performed, or the amount of hours being spent on specific jobs, etc. This is an example of a bid being submitted for a proposal or something along those lines, using activity-based costing. And so, yeah, there's rationale for service firms to be able to use activity-based costing. We can use activity-based costing to identify our most profitable customers by organizing costs to serve customers based off of key activities. We can estimate the total cost drivers for each activity, determine the cost driver rate for each activity, and allocate these customer services cost to each customer. A traditional activity-based costing benefits would include things like managers' ability to study, amount of time being utilized at each stage to help them to reduce controllable costs, looking at activities to understand the time value added, looking at streamlining things and improving overall processes, and of course the redesign of products and services to reduce cost. For time-driven activity-based costing, we rely on the cost of the production time supplied by an organization and the usage of that time by transaction type. And of course, we can estimate how much time one transaction takes and then assign that cost accordingly. And a lot of production companies actually use time tickets to do this type of study. So we can look at the formula here for time-based activity-based costing. We take the total cost of the activity divided by the practical capacity available expressed in time, or the amount of time used. So the cost per transaction, we would take the cost for supplying an activity times the number of minutes per transaction. And here we have an example of this total cost of the activity divided by practical time. And in this example, we're looking at things like customer sales and how long the process takes. So we take the total cost of the activity, the sales staff, etc. 55,680 divided by the number of minutes used, 96,000, gives us 58 cents a minute. We would then take that 58 cents a minute and multiply that by the number of minutes per transaction, give us a total cost per sale. In this example, $4.06. Idle time, of course, is unused time, and sometimes idle time could be obscured when it comes to using this type of time-bound measurement. So it's something to consider. So it's unnecessary for large facilities to go through this process because of that idle time. It will make more sense for service-based businesses and that kind of thing. So it's important to consider these elements. So thank you so much for your time today and discussing activity-based costing. If you have any questions, you can email me, call me, set up office hours, whatever you need. I'm here for you 100% of the time. And I wish you all the best. Thank you so much for your time today. Take care. Bye-bye.